from Markets with May, and today we're going to talk about the Mosaic Company and why I continue to be bullish, even though it's nearly doubled since I first started recommending it in December on my Instagram. So Markets with May is a daily market commentary, and occasionally I do tutorials and I do these stock specific videos. And so I'm really excited to have the Mosaic Company as my first because they are Tampa Bay based, which means they are very close to where I grew up. I absolutely remember their facilities in Plant City, driving past them as a kid. And so really interesting to kind of circle back to my agricultural country roots. I'm going to go through the fertilizer industry in the brief, a little bit of the macroeconomics. I'm going to talk about what has happened recently in the company that brought me back to it, a bit of the financials, and then where I think it might go from there. But before I get into that, I have a couple of announcements for you. First thing is that as with all markets related stuff on the internet, past performance is not indicative of future returns, and you will want to do your own investment research and make sure that it makes sense for your portfolio and what you're trying to accomplish. The second thing is that just like everybody else on the internet, I love it when you like, subscribe, comment, forward, all that stuff is just wonderful. It lets me know what content to create. Finally, I would also mention that this is not supposed to be the end-all be-all of all information that you could possibly know on Mosaic. It's a starting place for you to do your own research and determine whether or not this is something that makes sense for you to put your money into. Now, with all of that, let's get into this awesome name and why I am bullish, even with it almost doubling since where I first started really getting bullish on it. Many of you know, as a part of my investment process, I literally review the documents and listen to the earnings calls for 400 companies every quarter. And Mosaic is a part of the S&P 500. So I was really fascinated when I was listening to their call in the second quarter, around the February timeframe, and hearing about what was happening in the fertilizer business. Because of a series of things that were occurring in the emerging markets, nonetheless, but also with growing season, we were seeing a lot of very unique behavior happening in fertilizer demand. The market was very tight. There had been a few strange weather patterns that had resulted in shortages across a variety of places, and we started to see China motion for a second year that they were potentially not exporting any fertilizer out. As we moved into the summer months, China became more adamant that they would not be exporting potassium and phosphate as well as nitrogen. And I was like, uh-oh, this could be bad. There are some countries that import as much as 60% of those items from China specifically. Australia's got huge leverage to NPK off of China. And I was like, this is going to be a tight market, isn't it? Let's talk a little bit about fertilizer. You got your three majors, which is NPK, and there's a bunch of minor ones, but really the big three are kind of important for global fertilizer. Nitrogen's going to make your plants nice and beautiful green. Potassium and phosphate, potassium ends up becoming potash. That's going to give you that density per acre, so you're going to have higher yields. And that fertilizer sales globally have really been what's allowed us to have a booming, wonderful population. And in particular, as the emerging markets have come through, it's been fantastic for supporting that growth and not having people starve, quite frankly. Now, you got spikes in 2008. Some of that has to do with more capacity coming online. And then you had kind of this, I'm gonna call it boring period in the NPK market, more or less. But now we're about to enter into this really unique period, and that just has to do with a number of different things that really legitimately have changed this year in particular, especially with some of the global conflicts that we have that continue to escalate. Now, quick other note on fertilizer that's always important. I always tend to like Mosaic even more than CF Industries. CF really does focus on the nitrogen component. There is definitely ammonia usage, especially in the fertilizers business in Mosaic, but nitrogen has a couple extra things because it is more directly linked to nat gas, and you kind of have to know a little bit more of a dynamic there. Now, in fairness, probably at the time of the making of this video, I'm still a little bit long CF Industries, but at the same time, I think Mosaic is an easier story to tell, and it's easier to go through the numbers and understand what's going on dynamically in this crazy market. Now we get into the fall months and we look at what's going on with yields and crop prices globally and seeing what's going to happen for the fourth quarter and beyond, and I'm thinking to myself, wow, we got a few food shortages that look like they might happen here, and nobody's really putting out this potassium and phosphate. I think Mosaic's going to do pretty good. Now, I was also kind of thinking that nitrogen would be okay, but I kind of missed that because I was a little worried about what was going on in nat gas. But in this regard, on this side of things, potassium phosphate, it was looking really, really good. And so I started buying it into third quarter earnings, which was November 2nd. And sure enough, they reported a fantastic quarter. Stock traded straight up to 42. And I got out of some of it then, but then there was a secondary offering of primary shares that was now announced on November 9th, and the stock just decided it would not hold the $40 level, so to speak. For those of you that aren't a long time in financial services, it's sometimes hard to understand what's going on when you see these announcements. A secondary offering of primary shares in this case was Vale, which was a really big holder of Mosaic stock, selling about $1.3 billion worth of their stock. Now, this is not totally an abnormal or bearish sign. If anything, because of the way the deal went down, it to me seemed very bullish. Nonetheless, you got to get out of the way of large volumes of stock being sold. Now let's talk a little bit about secondary offerings of primary shares, because a lot of folks maybe don't totally understand what that is. A lot of the secondary offerings that you see are really an attempt at capital raise, but that's not what this was. This was a very large shareholder that needed to sell the stock because it was something that they had wanted to do all along, and that was Vale. Vale is a miner down in Brazil. They're really well known, and they basically acquired the shares when Mosaic purchased Vale Fertilizantes. I'm sure I'm butchering the way that you would say that in Portuguese, but Vale Fertilizantes is what gave Mosaic that exposure to the fertilizer business in a bigger size down in Brazil. And they had done that transaction, I think, in 2016, that exposure. Vale is a really well-known miner down in Brazil. They do a lot in nickel and a couple of other things that you'd end up putting in batteries, quite frankly. So they're a very interesting company in themselves. They weren't really doing too much anymore in phosphate mining or anything really in the fertilizer business at this point. And so it made sense to go ahead and cash out, since fertilizer had jumped so much and Mosaic had jumped so much over the year, and going ahead to get that capital back to deploy it in other ways. Now, the other thing I saw in that secondary that was very reassuring as a shareholder was that Mosaic went in there and bought 8.5 million shares of the 34 plus that came out. And that's like a huge positive when a company does that for its own stock, because it, number one, means they actually have the cash to do it, and the board already pre-approved it, knowing that they wanted to be out there supporting the stock. Given what I'd seen on the quarter as relates to free cash flow and also what was going on at the company in the way of finances, it was definitely the case they had enough to do it. And also, it really reiterated how positive they saw the dynamic within the fertilizer business in general going into the fourth quarter, such that they felt no problems doing this huge slug of stock buyback. Now, the mechanics of the market are the mechanics of the market, but there's one other little mini mechanic to note. Because the deal was managed by an investment bank, Morgan Stanley, that usually looks a particular way. What's going to happen is a company like Morgan Stanley is going to go out there and try to get interest in the secondary to place the stock. And if they can't place all of it, sometimes they'll even take a slug down. And given the amazing dynamics in the fertilizer market, it wouldn't be too crazy for them to take it down at a little bit of a discount. In this period of time, it would have been around the 37 level. Maybe they get a little bit more of a discount as the lead book runner on that secondary, after you take into consideration the fees. Nothing illegal here, guys. Nothing crazy. This is just normal business trying to get the sale done to clear the price out in an orderly fashion. Now, for my paid subscribers, I told them, you got to buy puts, but you should find places to get in here anytime it goes below where the deal was done at, because and we would expect that you would have a lot of time to accumulate, because essentially until we could really see it break that deal price and stabilize, there's probably still a little bit more pressure to go. And you could sure enough watch it trade down. I think at the lowest point it was around $34 level, but then it would bounce back up, and then there'd be a little pressure, and then so on and so forth. Now, we had a very bear month in the month of December, so you really could get some opportunities on this one much lower. And you'll notice in my Instagram, the timestamp is in December 16th or so, it's trading around $36. And I definitely added it to my Christmas buy-in list, because the dynamics were really being held down by this mechanical thing that had to do with the secondary. The company was very bullish, its own stock, and the dynamics within the fertilizer business were great. And that is independent of what we are now seeing today. Fast forward on the timeline, we start to see in December this little squabbles in Belarus and Lithuania. And Lithuania didn't want to ship Belarus's potash any longer, and there were a few skirmishes because, you know, fertilizer is a real thing. You don't want people to starve. You got a lot of countries that definitely need to plant crops and make sure that they've got good grain supplies, and you were kind of going in with, in certain cases, weak supply in a couple of different areas, corn, etc. So this was real contentious, and even though I think in December they tried to shut it down for Belarus, you had it continue to extend. You had some shipments going. And then we fast forward to January, and Lithuania puts a kibosh on it. They're like, no more shipments on the rails, guys. This is it for potash out of Belarus. At that time, Mosaic had already trended up past that deal price of 37, and so we still have it now comfortably hanging out at 40. That announcement happens, we get a little bit of a kicker almost immediate to like the $45 level versus right kissing 40 the entire time. But then what happens is we start to have this Ukraine-Russia thing. So now we have the sanctions that are taking place in Belarus and Russia, and Ukraine's not necessarily going to be exporting the same volumes of agricultural products that it has in the past. And you've got this massive tight supply in fertilizer and a real need to produce more grains because quite a lot of countries had drawn down their grain reserves, and you got this really crazy situation that's happening. These stocks are still really cheap in a marketplace that had largely been interested in technology and high multiple companies. So from now here, we're going to switch over to what's going on in fundamentals. Now, I'm not going to go deeply into financial modeling in this video. It's way beyond the scope, but please know that there are people that do a proper DCF and really go into it in detail. What I will do is just show you some of the statistics on Yahoo Finance and how you should look at them. And what I was looking at even before all of this most recent craziness was a very low multiple to earnings. It was low single digits. I think I was showing personally in my calculation around 5 or 6 times, depending on where that stock was wiggling around. But even now it's showing around 6.5 times earnings. And then if you do it on an EBITDA basis, you're about at the same place. They're paying down debt like crazy, although with that secondary, they didn't really pay down as much debt as they could have. Now you've got top line growth over 50% for Mosaic, and it had been that way for a couple quarters at this point. But I want to show you this in Yahoo Finance to really encourage folks that are still getting up to speed on how to read the financial statements, why it's so important. If you go to Yahoo Finance, you're going to see net income growth, bottom line growth, a little bit weak. It's going to show negative. That has to do with a lot of one-time items that are below the line, and there's all these different things that the management team has been doing, and so you really should look into the financials a little bit more deeply. But if you look at operating income, you're going to see massive growth over the last quarter. Operating earnings went from about 295 million to 970-ish million. So over 300% operating income growth. Really want to point this out because a lot of people would just use these data feeds, and even the algorithmic traders oftentimes are looking at their stuff through the data feeds, and they come to some really strange conclusions that can create opportunities for fundamental investors. If you're seeing this massive top line growth but this really weird bottom line negative thing, it's really worthwhile to go into the actual company financials and see what's happening. And in this case, you would have discovered that there were just some really strange treatments of some corporate actions that benefited them last year but looked cosmetically strange for this year. Additionally, I would mention that something that I saw that's very clear on the release is that although they made more money on all 3 of their major business lines, they didn't necessarily ship out more tonnage, which made me think that strategically they're just holding it for the true planting season to come. And you know, you're going to get better pricing instead of just let's sell as much as we can on volume. So that all made me a little bit happier about how to think about the subsequent quarters coming in through the end of the year. The fact is, this company is in a very specific trajectory because there's just a certain macro dynamic that's happening in their marketplace, and it is not a one quarter, one and done situation. Things like emerging market growth, that movement from one-child policy to something a lot more, the growth in the protein chain and demand for that, even with a lot of vegetarians coming on, that stuff isn't changing. The expansion of farming land in Brazil, these are all trends that are not just one quarter, so to speak. So I really encourage you to take a look at those financials and see what you think. But when I was looking at them, I saw a company that was significantly undervalued. Now, where do I think this stock could go? I think it deserves at least a market multiple on earnings, which would take it almost to a double from where it's currently sitting at now. It's always hard to know a market multiple when the year starts out as uncertain as it currently is, but it is trading so far below any type of near-term growth rate, at least from my perspective, for what I'm looking for in the ways of investments. The things that could make me wrong on this, these are things that you should consider. They might be things like the market just deciding it's not going to give it credit as soon as the conflicts subside in Europe. It could be that somehow things resolve such that Belarus starts exporting out a bunch, or Morocco starts exporting out a bunch, or there is actually an ability to massively increase production in Canada. There are some potentialities for production increases across the globe that definitely have to be monitored. Additionally, it's Mother Nature, it's crops, so there's always a little bit of an unknown as to what the farmer's going to do in his decision making or her decision making as we get further along into the planting season and then start thinking about next year, both in the northern and southern hemispheres. That's all I have prepared for this episode. If some of you are in this and you feel like I missed some of the points that are your favorites, please put them in the comments. Hopefully I've given you a good starting place for those of you who have never heard of Mosaic Company. And then for some of you that end up deciding to go into it after doing your own work, I'd love to hear, what was the tipping point for you in your investment decision. And also, if time goes on and you want to tell me that you're coming out of it, definitely put that in the comments as well. Now again, like, subscribe, comment, all that is really wonderful. Good luck in this marketplace. I know it's crazy out there, and see you next time. Bye.